It's time now for Quick Take by the Numbers, where we let the numbers tell the story. This morning's number is $19 billion. More than $19 billion has already been raised in IPOs on U.S. exchanges so far this month, according to data compiled by Bloomberg. That's a record for December, and we're only halfway through the month. The total so far this year is $172 billion. It's another record sum, and one that's all the more notable given that this year has been such a volatile one for the stock market. This month's numbers were boosted by DoorDash and Airbnb. Both of those companies raised more than $3 billion each in IPOs last week. And today, the parent company of the online dollar store Wish is pricing its IPO. That company is looking to raise more than $1 billion. But this month has also seen some companies put their IPO plans on hold. The video game company Roblox is delaying its IPO until next year, and the loan provider Affirm may not go public until next year, and that's because it's still working to get clearance from the SEC. Joining me now to discuss is Bloomberg News' Wall Street reporter Sonali Basak, live in New York. Sonali, I want to start with the challenges that these companies are facing as they prep for their IPOs. Why are we seeing a little bit of a pullback or pause with Roblox and Affirm versus the blockbuster action that we saw just in the last couple of weeks?
It's a great question, Tim, because when you look around Wall Street, a lot of bankers don't want to admit that some of this pulling back is because of the euphoria we saw in the market. When we saw Airbnb and DoorDash go public last week, DoorDash surged 86%, Airbnb more than 100%. And obviously, that's a much bigger price than what the bankers anticipated in an IPO. So what you're hearing now is Roblox tell its employees that they're looking to improve the specific process to make it better for shareholders and future investors, both big and small. Of course, in these listings, we're seeing a lot more retail interest than we've seen typically in prior years.
Okay, so let's break this down a little bit because I think there is some confusion about what happens when a company IPOs. Typically, the day before a company actually allows their stock to be traded on an exchange, they price an IPO. That IPO is money that's raised by selling shares to institutional investors, and it allows early investors to get out, and companies can raise money there to actually fund their operations.
Right.
Then if it has this big jump the next day, what that tells us is that that price the day before was wrong, right?
Correct, and that's why a lot of Silicon Valley is really frustrated with the current model. They hate seeing these IPO pops because early investors that sell the night before in an IPO at a given price, if it pops a lot the next day, it means there's money that's left on the table. They could have potentially sold for a better price. So a lot of people want a different model to these IPOs, and that's where you see all these different types of models like direct listings or SPACs, which are blank check companies that investors raise money for to then do an acquisition and buy a private company for a certain price. It helps negotiate that price and have more control over what that price of going public is.
Well, SPACs have been all the rage in 2020. It seems like direct listings were sort of all the rage in 2019. Is there one of those that seems to be gaining momentum for companies after these blockbuster increases that we saw last week, these pops that you speak of?
Well, we are seeing companies use these different models with different types of appeal. Direct listings did not boom as we thought that they would. When we've seen companies like Spotify use them, we saw Palantir use a version of that this year. And SPACs are also raising a record amount of money. But the thing about SPACs, Tim, is if they don't make a good acquisition, then they won't perform well. And we have not seen enough of them make acquisitions to put the jury out on whether this is a good model or not.
Sonali, I want to shift gears and use our remaining time to talk about stimulus and what your sources are telling you about a stimulus in the sense of a potential recovery here. We need to be talking about that. Lockdowns right now getting stricter. There's the expectation that we're going to see more bankruptcies. What are you hearing from your sources about a recovery or lack thereof?
So we're hearing that this recovery will be very long and slow, and that, frankly, and the most scary part to me is that some of this damage that we're seeing in the stock market will be permanent. And so even after we get a vaccine, how will that float into the broader economy with unemployment so elevated, so many people out of the workforce for the long term? What's more is that a lot of the bankruptcies that could have happened this year have been prolonged because the Fed really stepped to the rescue. So there's a debate about whether we're going to see a big second wave of bankruptcies, but there is a pretty set expectation that the pain will really last through the summer.
What about the uncertainty around a stimulus package here? It does seem like there is more pressure on lawmakers as they just have several days left to get something through before the end of the year. How does that play into how small businesses are thinking about their future as we get into the holiday season?
We've talked about this a lot, and one thing that's frustrating is that small businesses are shutting down now. They were shutting down yesterday. And so the ones that are shutting down, a lot of the stimulus is not coming fast enough to stem that kind of pain. So we're going to see ripple effects no matter what. And what's worse is that no matter what stimulus package we get, Tim, most people on Wall Street don't believe it'll be enough. They believe it'll run out very quickly as well. So I'm so sorry to paint such a dire picture here, but even with the stimulus, there is a huge risk that it's not enough to stem a lot of the bleeding that we're seeing.
Yeah, and the question remains is to what extent will a Biden administration be able to push more stimulus through come January when he takes office on January 20th. Bloomberg News' Wall Street reporter Sonali Basak live here in New York. Sonali, thanks as always for your time.
The biggest stories the moment they happen from around the globe. Subscribe to Bloomberg Quick Take now for insight in an instant.